Okay, so I'm going to show you the only indicators that I personally use, what they actually mean, and why they help me trade with more confidence without overcomplicating things. So, I'm Janam, if you don't know already, and I keep my chart fairly simple on purpose because more indicators on your chart having, a whole lot going on at one time doesn't necessarily mean better trading. So, I'm going to break down everything that I have on my chart in a way that actually makes sense to you if you're new to trading. So let's start with my absolute favorite, which is RSI. That can be found down here at the bottom of the chart. And you can change the colors of your RSI, but this is what mine looks like down here at the bottom of the chart. RSI basically lets you know, is price too expensive or is it too cheap? So RSI stands for the Relative Strength Index, and it helps me see when price is getting stretched in one direction. Now, your girl loves a good real life analogy. So think of it like real estate, or honestly, anything that people buy and sell. So if a house is normally about $300,000, but suddenly people start paying $500,000, the buyers are thinking, man, this is starting to get really expensive, right? Because it was 300 and people are now buying it at 500,000. It's getting a little expensive. So what typically happens? Fewer people want to buy that because it's expensive. And people who already own this $300,000 house, well, originally worth $300,000 house, are like, man, I can sell it for $500,000 and lock in some of this profit. That's what RSI calls overbought. When RSI is above 70, price may be considered overbought. Now flip it. If the same house, the same $300,000 house, drops to $200,000, people start to think, well, this is a discount. And what happens? More buyers then step in because it's kind of cheap. That's what RSI calls oversold, which usually shows up when RSI is below 30-ish. So why do I use RSI? RSI helps me to avoid chasing trades when price is over overbought or if it's oversold. So if it's too expensive or if it's too cheap. So it's not a signal by itself, but it does give some context. Next, let's talk about one of the most important levels on my chart, in my opinion, which is the VWAP. So we're going to go ahead and add it so that you can see where to do it. You want to go to your indicators tab here in Trading View and you'll type in VWAP. I already have mine's favorited. It's normally on my chart, but I wanted to show y'all how to get there. So you'll click on it and it will add it to your chart. This is what mine's looks like. You can always, again, change your colors. If you go into the settings, you can make it look different if you want different colors or whatever the case may be. But this is mine. So VWAP is basically the fair price of the day. VWAP stands for volume weighted average price. All that really means is it shows the average price most people are paying during the day. So, another real life analogy, think about buying a car. If most people are paying $25,000 for a car and someone asks for $35,000, you'd think, well, that's an overpriced car. If it's listed at $20,000, then you may think, well, that's a deal. The average price people are comparing it to is the VWAP. This is that average price. This is telling us what is the average price that people are thinking. So why do I use it? Price trading above the VWAP shows strength. Price trading below the VWAP shows weakness. So I like to use the VWAP as a key support and resistance level because institutions pay attention to this. So on this particular day, if you look, price is trading below the VWAP, which means that there's weakness in the market on this particular ticker. So price is continuing to go down and it's going down fairly strong. That helps us to decide if we want to be in calls or puts. And of course, we would want to be in puts. We would want to short this because it's trading below. Now let's talk about two moving averages that I use, and we're going to start with the 9 EMA. I'm going to go ahead and add it. Again, I already have it saved to my favorites, but you would search it the same way. And I use the 9 and the 21 EMA. So now you'll see that on my chart. The 9 EMA is going to be this orange one, and the 21 EMA is going to be this purple one. So we're going to start with the orange one. The 9 EMA shows short-term direction. So the 9 EMA helps me to see what price is doing right now. It updates quickly, so it stays fairly close to price. As you can see, for each candle, the EMA is fairly close for this orange 9 EMA. It answers one question, which is, are buyers or sellers in control right now? So this is how I read the 9 EMA. When price is above the 9 EMA, then buyers are in control. If price is below the 9 EMA, then sellers are taking over, right? And sellers are in control. Again, let's look at the chart that we're looking at right now. Price is moving below. It is trading below or forming below this 9 EMA or this orange line. So it's pretty safe to say at this particular time on this day, these sellers were in control. So, why do I use the 9 EMA? I use the 9 EMA to help me time my trades. As long as price stays above or below, then I know that the momentum is still there. When price starts closing in the opposite, so in this case, as long as price is trending below, then I know that we're still there. Once price starts flipping over it and trading above it, well, now we might be losing some steam. So that's something that I want to pay attention to because it means that the momentum may be changing. Not that it is, but it's no longer as strong in one direction and it may be changing over. So the next one is the 21 EMA, and this one helps me to kind of stay calm. The 20 EMA is like a trend guardrail. The 21 EMA represents the stronger trend. It moves a little bit slower than the 9 EMA, and that's on purpose. So here's another real life analogy. Think of the 21 EMA like a guardrail on a highway. So you might drift a little bit, right? You may drift, you may hit those little bumpy things on the side. But as long as you don't crash through the guardrail, then you're still on track. So, like I said, why do I use the 21 EMA? Pullbacks to the 21 EMA are normal. Price can pull back to the 21 EMA. Breaking through it tells me that the trend may be changing, very similarly to the 9 EMA. One tells us about the direction and who's in control, and the other one lets us know if the trend is still on track. And once we start moving in the opposite direction, whether up or down, in this on this day for what we're looking at, it's moving down. But once we start moving up it, then we know that the trend could be changing. It's not as strong anymore. It's starting to hit or bump into that guardrail. Last but not least, one of my other favorites is volume. And volume lets you know how much strength is behind a move. So let me add volume to the chart. Again, you'd search it the same way. You go to your indicators at the top of TradingView and you would search volume. Mine's is already in my favorites, so boop, I can just add it to my chart. Now you can see these volume bars down here. This is what volume is down here. Volume is going to show you how many people are participating in a move. So another analogy. I told you your girl loves analogies. Um, I like to think of volume like pushing a boulder uphill. So if one person is pushing a boulder, that boulder might move a little bit, but it's not going very far for very long. That person's probably going to get tired pushing that boulder. Now imagine if five people are pushing that same boulder together, then there's going to be more strength there's going to be more momentum, and the boulder is likely to go much further for much longer. That's volume. So when we have low volume, like let's look at this green candle here, for instance. This is a green candle, and when we look at the corresponding volume bar down here, it's fairly low comparatively. We can just look to our left, and now that the market is, this day has already passed, we can look to our right. But if we look to our left, we can see that this volume bar is fairly smaller than all of the ones that came before it. So although price was moving up, right? So people, one person, right? Or however many people were in this move, but that many people were moving it up. There weren't a lot of people in that move. So although price may have been moving up at this particular time, it wasn't going to go very far for very long because there wasn't a lot of people in it. But if we look at another candle, for instance, let's look at this red candle. Not that one, this one. This is what I was going towards. If we look at this one, we have a much higher volume bar. If we look to our left, this volume bar looks much higher than several of the bars that came before it, which means there's a lot more people pushing this boulder. The likelihood of price continuing down is higher, right? It's going to move further for a longer period of time because there's more people in it. So a breakout with low volume is like one person pushing the boulder. So yeah, it might move, but it's more likely going to fail. It's not going to go as far for as long because there's just not as many people in the move. But if you have high volume, that tells you that the market agrees with this move. More people want to participate in the direction in which price is going at that time. So this is my entire chart setup. It's fairly simple. It's very intentional. I don't think you should put things on your chart that don't help you with your trade. Things shouldn't just be there for show. You should have everything on your chart that you actually use when making a decision to enter a trade, exit a trade, or to stay, to let you know if you should stay in said trade, how strong that a move may particular be. So let's recap really quick. We have RSI at the bottom here, and that's going to answer the question, is price too expensive or too cheap? We have our VWAP, which is, mine is this green little blob and this blue line here. This is the bands, but this blue line here, and it lets you know what's the fair price today. The 9 EMA, or this orange line here, what is price doing right now? The 21 EMA, which is this purple line here, is this trend still healthy? And then we have volume, which are these volume bars down below, and it lets us know how much strength is behind this particular move. So if you're a beginner trader, keeping your chart very simple can really change everything. You don't want to overcomplicate it, and you don't want things to be too confusing. I hope that this video helped. If it helped, like the video, subscribe to the channel, and comment chart below. And I will see you in the next one.